Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope everybody had a beautiful day. And in today's markets, guys, the consolidation to the downside simply continues. It's now been 4 red days in a row, and some of our short-term timeframes are beginning to get oversold. So are we potentially approaching an area of maximum pain for the short term and expecting daily bounces to arise soon? Well, we'll take a look at that in today's video. In terms of the markets today, the markets were really down because of some semiconductor news. We had some big earnings come out from ASML in the morning, one of your lead players in the semiconductor industry, and unfortunately their guidance was a bit lackluster. So all of your semiconductors leading the way to the downside today. In terms of your macro news, well, we didn't get much in terms of economic data whatsoever. No negative jobs data, no negative economic data, and really no negative data in terms of inflation either. It was a very muted day in terms of that. And also in terms of your geopolitical headlines between Israel and Iran, no new developments there, although tensions do remain high. So today was really a case in point in one of your lead bulls, semiconductors, losing some key levels and gaining some momentum to the downside. And this is what we've been talking on the channel for a while, guys. Big tech and semiconductors were some of your last remaining bulls in the market. And if they were to roll over and join Team Bear, the sell-off would accentuate further to the downside, and that's kind of a bit of what happened today. But with all the red, we are potentially approaching some oversold levels and could be due for a bounce soon. So in today's video, guys, we're going to take a look at ASML earnings and exactly what they reported. We're also going to take a look at our major technical analysis rundown in terms of indexes and our major tech names and see how everything stands before a very, very important week of earnings next week, where all of your major tech names are mostly reporting earnings, all of them except for Apple. So with all that said, guys, let's get right into today's video. And as usual, just before we do that, guys, if ever you want to skip to a certain portion of the video, always feel free to click the timestamps. They're always linked down below if ever you want to view a certain portion of the video, whether that's your indexes, your big tech names, or stuff like that. So let's get right into it, guys. So SPY down 0.59% for the day, QQQ down 1.22% for the day, and the only bright point in the market was financials coming into a little bit of green towards the end of the day. Take a look at the heat map here, guys. You'll see that largely it wasn't as red as yesterday, right? Not a sea of red, largely led down, however, by your semiconductor names, and big tech as a whole did not have too good of a day either. Healthcare, fairly mixed as a sector as a whole, but nice to see a few names finally catching a bid after some extended sell-offs the last 2 weeks, and financials just the same. Finally, some of them catching a bid after largely being down, straight down for pretty much the last 2 weeks. The bottom half of the market wasn't performing the best. We did have some slight outperformance here in utilities and some real estate names as well. And that was largely a byproduct of your 10 and 20-year yields just coming down for a healthy retracement today. So those sectors seeing a little bump on the day because of that. On your one-day relative, you can see that even better. Utilities finally catching a little bit here, but to the upside, we didn't really have that much, guys. It was all your minor sectors to the upside. The ones with the heavier weights were really the ones bringing down the markets, and you can see that even better when we take a look at technology here, really not having that great of a day at all. On the 1 week relative performance, guys, unfortunately, everything still remains in the red and heavily in the red, but we will take a look at some of the levels on the charts and determine whether or not we could potentially be getting a bounce soon. So with all that said, guys, before we get into more technical analysis on our large tech names and indexes, let's take a look at one of our first earnings for the season that's going to be kicking off with a bang. It's going to be ASML. So let's take a look at our earnings anticipations for the week. So they came out with earnings prior to the open today. Another very, very important semiconductor name will be tomorrow, TSMC, another one of your largest players in the game, guys. ASML and TSMC are very important names. Number one, ASML manufactures the machines that TSMC uses for the production of their semiconductors. And obviously, TSMC is the largest semiconductor manufacturer in the world. So if they tell you that there's a slowdown in overall demand for the first half of 2024, we need to listen, guys, because these are the top tier players in that market. And if they see slowdowns in demand, most likely all of your smaller players in the sector will also be forecasting for the same. This is nothing new. These companies did guide for this last quarter, saying that the early part of 2024 would be a little bit slower than the end half of last year, 2023. And now, unfortunately, those expectations are indeed coming true. So ASML having a pretty bad day here today, guys, down about 7% on the day, one of their largest declines in recent memory, pretty much going back almost a year ago at this point, but all was not as bad as it may seem. So let's take a look at some of their earnings right here. You can see that they did have a beat on EPS by about 5%. That's a very healthy beat indeed. In terms of the revenue, they did miss expectations for the quarter here, coming a little bit light by about 4% to the downside. So let's take a look at the news article, and then we'll take a look at their fundamentals and see how the company is shaping up and whether or not it's coming into a nice little buy area in terms of being fairly valued or even cheaply valued, right? So let's take a look at the news headlines right here. Shares of critical chip firm ASML dropped 5% as sales missed expectations with 22% fall. This sounds like a very big number, but they're measuring in relation to Q1 of 2023. We're going to take a look at that when we take a look at the company's financial statements. So, few of the headlines right here. Net sales fell 21.6% year on year, while net income dropped 37.4%. This is the bottom line. It sounds like a big number, but when we go over the financial statements, you'll see that it makes a lot of sense when we take in consideration the drop in net sales. It's actually not that bad, guys. ASML's net sales fell in the middle point of the company's guidance. Net bookings for ASML's machinery, a closely watched booking, totaled 3.6 billion euros in the first quarter, down 4% year on year, but plunging nearly 2/3 versus the December quarter. This is the amount of money that they have in their pipeline. It came in a little bit light as other companies, guys, are pulling back on some of their orders and trying to save capital amidst these uncertain, to say the least, economic conditions, right? In terms of rising inflation, slowing down demand, a lot of companies are just pulling back their production a little bit, and we'll get more into that later on into the article down here. ASML is one of the most important semiconductor firms in the world, producing tools known as extreme ultraviolet lithography machines, which are required to manufacture the most advanced chips globally. So that's a lot of fancy words, guys, but essentially what it is they make these very massive machines. I'll show you them. Take a look at this, right? This is one machine, and each one of these machines that manufactures those small little semiconductor chips cost between $150 to $200 million, right? So each one of these, that's how much they cost. Very, very important company in the grand scheme of the semiconductor industry as a whole. Now, last year, weak demand for consumer electronics such as smartphones and laptops hit chip makers that produce semiconductors for those devices. That has in turn led to a slightly weaker call for ASML's gear. Now, here's a few quotes. So ASML's latest financial results were not the numbers many investors had been hoping for or expecting. After an excellent Q4 orders, Q1 orders were expected to shrink due to their lumpy nature, as I discussed in the introduction. But the amount that they fell was worse than expectations and could potentially be an early warning sign for concern. We talked about this in yesterday's video here, guys. If semiconductor demand is slowing down, as shown by some of your market leaders in that industry, your semiconductor industry as a whole may start to have a little bit of price reset here to the downside. It's been a very nice rally higher. Now we may just be in for a little bit more monthly consolidation after these weaker than expected Q1 numbers. If that persists with companies like TSMC tomorrow, well, that's going to be really bringing us down here on that semiconductor chart. Let's continue in the article, shall we? Now, there are a number of factors at play. The economic environment is still incredibly uncertain, and thus customers are not ordering in the same quantities as they have done previously. There is a transition in product in 2025, so some may just be holding off and preserving any spend. It's still early in the year, and things may turn around. And finally, China sales are good, but difficult to gauge as to what will happen going forward. Obviously, China in a little bit of a recession right now. Now, here's the company outlook. Our outlook for the full year 2024 is unchanged, with the second half of the year expected to be stronger than the first half. Exactly what they said last quarter as well, in line with the industry's continued recovery from the downturn. So it's not an ASML problem, guys. It's a whole semiconductor slowdown period. Is it a bad thing? No, it's just a cyclical business, guys. There's ups, there's little downs, and then the demand picks back up, right? Now, further on, we see so this was the CEO. That's what the CEO said. Now, he continues in saying, we see 2024 as a transition year with continued investments in both capacity ramp and technology to be ready for the turn in this cycle. ASML's equipment is purchased by the world's biggest chip manufacturers, such as TSMC, Samsung, and Intel. And now here we have a further piece of quote here by the CFO of ASML. I think by 2025, you will see all three of those coming together. New fab openings, strong secular trends, and the industry in the midst of its upturn. Just a quick reminder of the industry as a whole here, guys. The industry is very, very good. This is data from ASML that they published, roughly a year and a half ago, but it still stands true. Just take a look, guys. This is pretty much every single segment in your semiconductor industry as a whole. Let me move myself over. You can see that whether it's smartphones, personal computers, electronics, right? Servers, data centers, automotive, industrial electronics, everything moving to the upside. And these charts are through 2030. It gives the total semiconductor industry here, bottom right corner, it gives them a total compound annual growth rate of about 9% per year. So this is going to be a very nice industry expansion, guys, over the next 5-6 years. So the growth for these companies is definitely not done. This early 2024 transition period into a late 2024 boom and 2025 boom may just be the last time that we are able to pick these companies up at relatively juicy levels compared to what they'll be at the end of this year through 2025 and onwards as well. So build your shopping list for semiconductors, guys. These discounts will not last forever and may be the last of their kind as this industry continues to go on into its maturity, right? Looking very decent in that aspect in terms of that. So with all that being said, guys, with the news article, let's take a look at exactly what the company said in terms of their earnings, right? So we're going to go over a few of their earnings metrics, and then we're going to get into exactly what the problem for ASML was this quarter, right? So we're not going to go over many of these slides as a whole. I just want to show you guys the financial statements, right? So here we can see the company does do a good job of returning capital to shareholders, which is an important metric as well. So I shouldn't skip over this slide necessarily. You can see net increase in dividends, which is very good. The company generates decent free cash flow, although this past quarter here was negative. On average, they do generate a decent amount of cash flow, and they use that to also pay back investors in two forms. Number one, very healthy dividends. And number two, you can see here the dark blue line, right? Your share buybacks line. Oops, that's a bit too big. Share buybacks right here are a majority of how the company pays back capital to investors. So that is very, very good in terms of the company as a whole. Now let's take a look. Where did the company falter over the course of this quarter? Well, let's take a look here, guys. You'll see total net sales was a problem. We're comparing with very strong numbers, 2023, right? Take a look at all of these total net sales. High 6 billion marks, right? Every single quarter, even last quarter, 7 billion. Take a look at this quarter, guys. Only $5.2 billion. That is a net drop as a whole. In terms of your gross margin percentage, that hasn't really changed, right? So even though their sales dropped a little bit, they're still able to bring their cost of goods sold obviously dropped as well. And that's why you have fairly consistent gross margins. That's not bad at all. In terms of their expenses, why did we have here, guys? Why did we have such a significant dip, right, in net income, right? 37.4% dip in net income. Well, it's not as a byproduct of their R&D costs skyrocketing, right? So take a look at your R&D costs per quarter. We can say that they're roughly, an average point of about $1 billion per quarter. And this quarter was really no different, coming in at, $1.032 billion right there. So fairly average. Your SG&A costs, selling, general and administrative, also largely the same, not ballooning in that respect either. That is fairly in line with what we got last few quarters as well. Now, here is your net income drop as a whole here, guys. So take a look at your net income. It used to be high 28s, even 29. Now we're down to 23%. There is pretty much your 30% drop. But is it a byproduct of the company ballooning expenses? No, not at all, guys. It's really just a question of the company bringing in less amount of sales while having the same expenses, right? So that is the problem. Less sales with the same expenses, that will ruin your net margins. But as a whole, is the company still healthy? Very, very healthy company here, guys. Just a little bit soft in terms of your net bookings. Take a look at your net bookings. Last quarter was a record quarter, coming in at like $9 billion in the pipeline for future sales. Well, now we only have about $3.6 billion as of this quarter. So that was a big drop off that Wall Street didn't really like. It just goes to show, guys, that they're in a little bit of a, as the CEO said, right, a little bit of a transition period for the first half of 2024, but they do expect this to pick up in the later part of the year. Take a look at your statement of cash flows right here. You can see that unfortunately, as opposed to the Q4 read, which was a blowout quarter for free cash flow for them, we now ended negative. That's very unfortunate, guys. Negative free cash flow for the quarter. It just kind of ruins their capacity to further increase that cash pile that they have in reserves. Now let's take a look at that cash pile in reserves that they have. You can see it's really not that bad. We're still sitting on about $5.5 billion in cash and cash equivalents. That's very, very healthy. In terms of total net debt, your non-current liabilities, so that's your long-term debt, about $10 billion. So really not over leveraged in terms of debt to cash. So the company's financial position is a relatively juicy one. Really nothing negative to say about the company at all. You can see if we come up in their financial statements in the past, you can see that the company's never really had a problem with debt, always usually holding high amounts of cash and usually on a yearly basis. Now, this was a light quarter for them. You saw that number right there. We had negative free cash flow, right? It's all the way up here, negative $676 million of free cash flow down here, bottom right. Well, that's not been a problem for them. That's kind of standard with the way that they start the year. Take a look at last year, right? Q1 of last year. Well, they didn't bring in that much free cash flow either, and Q2 is not much better. Where they really started ramping up their cash flow for the year was in Q3 and Q4, and I'm largely expecting the same thing for the company. In terms of how the company is set to grow in the future, you can see that the future for this company is very bright. Take a look at your EPS growth through 2027. Outstanding EPS growth. Now, although the CEO said that EPS and revenue would be fairly flat for the year, which is also reflected on these TradingView charts, you can see 2024, not much EPS expansion and not much revenue expansion either. But 2025, 26, 27, they expect a heavy ramp back in production. So that is definitely going to be a juicy period through 2024, guys. Especially early 2024, like right now, the first half, this is going to be the time to pick up some of these companies. So the next question you should be asking is, well, is the company a buy right now, sitting about $900? Well, we did some valuation. Before we get into the valuation, let's do a little bit of technical analysis for the company, right? So we can see very, very gorgeous monthly uptrend right here, guys. We're just literally looking for the monthly higher low for further trend appreciation later on in the year when they regain some of that production capacity, right? So that's going to be the main feature for the company. So if we do see some extended dips here with the rest of the semiconductor industry, perfect natural movement for this industry as a whole, we would probably be looking for a very juicy buying opportunity. If we can find this down here in the lower $800, lower $800 range, that would be very, very juicy in my opinion. The company has just now started a weekly downtrend. So if that does persist through the rest of the month of April and maybe even the month of May, we could be getting some very juicy prices in the lower 800s. Let's do some valuation to see if that does stand true. Now, revenue growth, very, very healthy for the next couple of years, 12% per year. EPS growth for the next through 2027, 18% per year. That is fantastic. So I did two valuations here. And the reason I did two valuations is because we have flat EPS in 2024 and flat revenue. So we want to do two case scenarios. The PE ratio for 2024 forward, and then the one for 2025, because this is when they really start their growth again. So if you have a 2-year time horizon, it is looking a lot better in terms of valuation than the 1-year horizon. That's why I did both. So let's get into it right now. The forward PE for 2024 at $900 right now is about a 44, a little bit high. The PEG ratio, so the PE ratio as an expression of how much they're growing per year, it's just the PE divided by your EPS. The PEG ratio allows us to put all the companies, guys, on a same common denominator and figure out between them which ones are cheap and which ones are expensive, depending how fast they are growing. Very, very important metric. So you can see the forward PEG for the end of 2024 at $900 is about 2.45. And I said here, it is a little bit high. Anything under 1 is amazing. Between 1 and 2 is okay, justifiable if the company's growing fast. Over 2 starts to get a little bit rich, right? Not that good of a deal anymore is what I'm saying, right? So if we put it on 2025, however, the things change drastically. I don't know why I put 2024 here. Let me just fix that right away. So the forward PE for the end of 2025, very important here, 28.7. You can see that number improves a lot because your EPS grows a lot in 2025. That gives them a forward PEG for the end of 2025 at $900 of about 1.6. That is very juicy, guys. But if we come down into the 800 region, this drops to about 1.4. And that is a very, very attractive company, very, very attractive valuation for a company with such heavy growth prospects. So I will be looking for some of these dips, guys. I do not have a current position in ASML, but I'd be very interested in building one if we can get these lower 800 prices. So that is where I'm going to be shopping for this company myself. Going to be very patient on this one while the market continues selling off, while fears are still a little bit high. And if semiconductors as a whole go into monthly consolidation, such as this chart is showing, right? Well, we're going to be able to pick up a heck of a good deal down here in the 800s, in my opinion. And that would be a sell-off top to bottom, if it does happen, between 20-23%, which is really standard with the sell-off we got last fall as well, where the company dropped about 26%. So that would be really standard in terms of percentage drops with how they've done in the past, in the context of an overall bull market trend, right? So hopefully that was helpful for ASML earnings as a whole. Now, guys, let's jump right into our technical analysis of our major stock market indexes. And we can see right here, guys, that SPY simply just continues our daily downtrend currently. Right now, we're getting close to daily oversold. Not there yet, but getting close. The lower time frames, the 4 hour is approaching 4 hour oversold right now. And the 1 hour has kind of been really, really weak as of recently too. So we could be expecting a little bit of a bounce. Tomorrow, if for some reason, guys, we have a gap down open, I do believe that that will send all of your lower time frames into oversold conditions. And that is when we maybe be able to start a daily bounce underway, right? But when that daily bounce happens, I will remind you what we are looking for. When the daily bounce happens, you will notice a change in the hourly trend. We are going to get an hourly uptrend formation. Now, while that hourly trend is in place, that is going to create what we call the daily bounce. And for the daily bounce, we need to measure how high will the daily bounce get in relation to our most recent lower high, 519. Because as of now, the expectation is on any bounce, lower high for lower low continuation, because the bears control the short-term daily downtrend right now. But if the bounce is significant enough, we're talking on the fib levels, we need to see at least, guys, in my opinion, a 618 bounce or as high as 70%. If the bulls can do that over the next week or so, right, especially with tech earnings, then the bounce is going to be significant enough that we may be able to reset this into a new daily uptrend if tech earnings are good, if Jerome Powell blesses us on May 1st and isn't too hawkish with us, and if your geopolitical tensions go away, that could be a very good recovery story. So far, all of that is just speculation. So what we have to go with right now is what we see on the charts, and what we see is clear as day. Daily downtrend, just looking for that lower high into lower low. Keep an eye on your overhead resistance levels, guys. We're now below this big zone of previous support. It will now be acting as resistance, and we do have all of our moving averages above us as resistance too. So the bulls definitely do have their work cut out for them. So when the daily bounce occurs, and we're getting close, guys, we've already filled almost the gap from the NVIDIA earnings, right? So if we do have a little bit of a gap down open, fill the remainder of this gap right here, oversold conditions, that is when your bounce may start occurring. And then we will need to see the size of the bounce, all right? So hopefully that helps. In terms of weekly context, you guys know the drill, right? We have now lost the weekly uptrend, but it is not a weekly downtrend yet. A lot of your individual sectors have set weekly downtrends, but not the SPY. Weekly downtrend would be lower high into lower low. So far, we have not had that. It is just your first weekly leg down, but we could be expecting, guys, if the data does not improve, if tensions remain high, and if inflation concerns remain high, maybe expecting off of this, if we do get a little bit of a daily uptrend here on the weekly, may just be expecting lower high into lower low. We will keep a very, very close eye on this as a whole. And before we get into QQQ, guys, just to give you guys an extent of the sell-off, are we at maximum pain for the whole extent of the sell-off? You guys know that last October took us 3 months to really achieve max pain levels. So far, it's only been 3 weeks of sell-off, but let us check our indicators that we bring up when markets are selling off. First is going to be the percentage of stocks above their 50-day moving average. And you can see, guys, that we're pretty much crushed down here. Only 27% of all stocks are currently above their 50-day moving average. You can see that last October, at the peak of the sell-off, we got down to about the low 20, right? 23%, 21% of stocks. But you can also see this is a weekly time frame. It did last here for a while, talking about 5 weeks at the lows, right? So it doesn't mean that as soon as we hit the lows, we have to bounce right away. It could just be coming choppily down into this area, then maybe hover around here for a while before we start getting some of that returned bullishness, maybe towards the midpoint of the month of May. So keeping a close eye on this indication, but we're definitely getting close here, guys, to some of the levels we saw back here in October, but in my opinion, not there yet, right? And now let's take a look at the other one, the other big major indicator, which is your percentage of stocks above your 200-day moving average, which is a very big moving average indeed. So let's take a look here. We are only sitting at about 50%. So the market is relatively mixed. Yes, we are on a significant downslide here from the earlier point in April, but still not even close to the oversold levels that we got a few times last year. Number one was the banking crisis. You guys remember that, right? Small and regional banks last March. Well, that got us all the way down to about 38-40% of all stocks above their 200-day moving average. Now we're still sitting at 50, so we're not really at the peak of even the fear of last crisis in March. And in terms of the October sell-off, that got significantly lower here, guys, talking about the low 25% range. So really, it just goes to show, guys, that these markets could have a little bit more sell-off left in them, but is it going to be a waterfall drop? I'm not expecting that. Maybe just a choppy sideways and down movements here. That's a bit too much here, but let's say exactly something like this, which sometimes may take up to a month and a half, stuff like that, right? But we do have big tech earnings coming up next week, and the bulls will have a chance, if those earnings are good, at recapturing some of your short-term levels, and we will reanalyze the markets from now. At that point. As of now, though, the bears do remain in full short-term control. I'll still remind you, though, still on the monthly, looking for that monthly higher low for trend continuation later on in the year. Still in the context of an overall bullish market, this is just natural monthly consolidation at this point. Now moving on to QQQ. So QQQ as well, continuing this daily downtrend, right, is QQQ. So now at this point, we are well below our previous area of support. That was roughly the 435 level. You can see it best on the NASDAQ futures, right? This very, very big region around the 18,000s on the NASDAQ futures. Now we're well below that. This chart is a little bit cleaner than the QQQ because there's no gaps. You can see the levels a lot more clearly. So whenever we do get those daily oversold conditions, you can see we're not there yet on the NASDAQ futures, and even on the QQQs, we are just not there yet, guys. So let us use the NASDAQ futures for the purpose of this example right here. We can see that in terms of our short-term timeframes, 4 hour, we're getting oversold. 1 hour, we've been oversold for a while. So now it's up to the bulls, guys, to reset this hourly uptrend. As soon as you see the change in the hourly uptrend, well, then you know that your daily bounce is likely underway. And then once again, part two of that is we need to measure the size of the bounce in relation to 445, which is our most recent lower high. Depending on the size of the bounce on that hourly, it'll give us the best indication whether or not the bulls are able to reset the daily uptrend, or if the bounce is too weak and we get stopped out at this resistance level right here, get stopped out at the moving averages as well, which are above us, well, we may just be due for another potential leg down, which would just send us into further and further weekly consolidation as a whole, right? So as of now, QQQ clear weekly downtrend, which means that monthly consolidation is definitely underway. The maximum pain level that I'm expecting for QQQ, keep in mind, we are very far away from that now. But if we use last October as a guide, same principles, right? We had Israel for the first time being attacked by Hamas. That was the early portion of October, and that really sent markets towards their last phase of the decline. Last October, we also had resurgence in inflation fears and the Fed saying much higher for much longer, right? So these are all the same characteristics of this current market environment. Couple that with the fact that last October was selling off after about 4 or 5 months of beautiful rally. So these two market events largely due to the same things, and that's why I'm expecting the same format of potential sell-off. So hopefully that helps. Moving on to XLF financials right now. So financials still trapped in this daily downtrend right now, although they were up 0.25% on the day, doesn't really show on this daily candle, right? A bit of an inside trading day with yesterday. Now, financials are quickly approaching daily oversold. You can see all of this bearish volume coming in the last pretty much week and a half, right? Really losing our beautiful trend line. We're now below all of our major moving averages. So similar to SPY and QQQ, all we're looking for eventually will be for when that daily bounce happens. Keep an eye. hourly trend change. The bulls are doing a good job playing defense. If we can convert this into an hourly trend change tomorrow, well, then your daily bounce will be underway. And the same rules apply. We want to get as close as possible to 42, right? And I would need a significant bounce here, guys, right? I would need to see us get at least as high, put the fibs on this, need to see a 61% retracement to give ourselves the best chance, right? If we can see a daily move higher, come right back up into this 41 level, it'll give the bulls a great chance of potentially resetting this daily uptrend and start recapturing some of those levels. But if your fear continues in the markets, guys, that leads me to believe that the bounce is going to be weak, and we most likely are expecting the lower high, and then it will remain to see, can the bulls protect the lows, or are we just going to set lower and lower lows and continue this unfortunate weekly consolidation for a bit longer? So we're keeping an eye on that, below our moving averages. We're also below a key area of resistance, the previous all-time highs. We were above them. Now that we're below them, they will be acting as resistance, unfortunately, once again. So I'm expecting a lower high, then remains to be seen, can the bulls save the lower lows, or but we just roll over for further losses, plunging the financials further and further down into their healthy weekly consolidation and into their very healthy monthly consolidation as well. Now moving on to XLV Healthcare. So XLV Healthcare not looking too bad here, guys, only down 0.17% in the grand scheme of how red some aspects of the market were today. So you can see your bulls are trying to play defense down here, guys. They've been playing defense for the last 4 days in a row, still no clear hourly uptrend. So same principle applies. When we get that hourly uptrend right there, watch the size of the bounce. We are now daily oversold on healthcare. Daily oversold on healthcare does not occur that many times. You can see it happened last October at the bottom of the market. We got a little bit of a rally. Happened back here in the early portion of October. We got a little bit of a rally, right? Happened back here in last May, got a little bit of a rally off of it. So healthcare really doesn't stay daily oversold that often. So we're coming up on the bounce area. Couple that with the fact that the 200-day moving average is right below us, and we are coming up on this big level of support as well. Those two things are about at 137, 137.50, and this is the area of support that I'm counting on the bulls to start putting up a fight. So we're in it now. Remains to be seen, can they do it, right? So daily downtrend is clearly underway right now, setting the lower high, lower low. So at least our most recent lower high is right here since we flushed these lows today. So it's very, very close here, guys. A decent bounce on healthcare right now could give the bulls an engulfing move and allow them to reset a little bit of a daily uptrend here. And when that happens, we'll be looking on the weekly. How big is the size of the weekly bounce? Is it a big enough weekly bounce? Well, then the bulls have a great chance of resetting this weekly uptrend above this area of support. However, if it's a weak bounce, then we may just be looking to challenge these lows once more, talking about that 137, 136 range. So keep a close eye on healthcare, guys. Healthcare and financials have really jumped the gun on the sell-off, right? QQQ arguably was late to the ball game in terms of the sell-off, right? So can we see a scenario maybe where financials and healthcare bottom out first and start putting in some green, and then that will allow QQQ to have its form of consolidation and there's healthy market rotation? That could be a very very likely scenario that I could see happen in these markets. But overall, it would just be bearish rotation, right? These sectors would just be taking a little bit of a breather, right? Financials and healthcare may take a little bit of a breather to the upside, which is going to help SPY, but then QQQ may have its a little bit more of a drastic sell-off here, as big tech and semiconductors really haven't come down too much off of their all-time highs so far. Moving on to semiconductors now. Semiconductors did something big here today, guys. We were keeping an eye closely on this 213 level, and unfortunately, although we closed slightly below it now, we are indeed below it. So daily downtrend on semiconductors is underway, and now, unfortunately, guys, it does look like we are going to lose the weekly trend as well. Weekly lows have been flushed, so weekly downtrend is likely at this point. Still 2 days left of trading in the weekly. The bulls can recapture this if ever TSM has some beautiful earnings tomorrow. But with what ASML guided, guys, TSMC, if you guys don't remember last quarter, they guided for the exact same thing. They said 2024 first half is going to be slightly soft, but they expect amazing things in the later part of the year. And if they reiterate that guidance, guys, well, that may be the one thing that pushes semiconductors really below this 213 level now, where they were barely cracking it, right? It's really anybody's ball game still, but not looking the best right now for semiconductors. If this weekly downtrend simply continues at this point, guys, we will be looking for extended monthly consolidation, right? It's going to be very, very healthy. You can see semiconductors last October sold off a total of 14%. And from top to where we are right now, that's already 10%. Doesn't look like it because we're still at the highs. So maybe we could be expecting a little bit more into the month of May. Maybe go back and challenge this 200 psychological level and maybe hover around here for a while. Allow our monthly moving average, the 12 EMA, to catch up. We're really far away from that 12 EMA right now. And you can see every time we've pulled back, we've kind of almost tagged this indicator in the past, right? So it may just be looking to come back, tag it a little bit, and then continue on the rally for the second half of the year, which is going to be better for them. So keep that in mind, guys. Semiconductors now starting their sell-off after remaining flat a better part of the last 5 weeks while the rest of the markets were selling off. Now one of your last lead bulls is joining Team Bear, which was one of our worries leading into this week as well. Now, moving on to IWM Russell. IWM Russell obviously not having a great time here today. 1.06% to the downside. So your daily downtrend, guys, simply just continues at this point, right? At this point, guys, your IWM bulls are going to have a heck of a bounce to reverse this, right? So any bounce at this point, whenever the bounce happens, keep an eye on your hourly trend change, right? That is what we're going to be looking for to get the daily bounce underway. Then we're going to be looking for anything below 202.95. Let's call it 203, right? Just going to probably be looking for the lower high into lower low. I'm not expecting, good things from the Russell at all, really, with interest rates coming back up. Your 10 and 20-year yields coming back up really puts a lot of pressure on your growth stocks and also puts a lot of pressure on your small and medium-sized banks, which are highly exposed to interest rate fluctuations right now. And keep in mind, your small and medium regional banks do represent 17% of the weighting of all stocks in the IWM, the Russell 2000. So those have been having a heavy impact as of lately for sure. In terms of the Russell, where do we stand? Third big week of sell-off right now. Unfortunately, we are now back below our previous big area of resistance. It was acting as support, but the bears have really just engulfed the entire thing. Weekly uptrend, unfortunately, at this point has been lost. So if we do recapture a semblance of a daily uptrend from here when that happens, probably just looking for a lower high, and then we'll see can the bulls protect this lower low, or whether or not we are going to head a little bit lower. The next stop for IWM Russell, in my opinion, is going to be the midpoint of this range, this massive chop zone right here. Your 200 weekly moving average is down here too. That is the 185 region, a better buying opportunity in my opinion. But so far, guys, there is no urgency to be purchasing the Russell as interest rate cuts have now been pushed back to the later part of the year. And that is the only thing, in my opinion, that is really going to send this finally into a consistently bullish monthly uptrend here. We're going to need those rates to come down. Now, lastly, the Dow Jones. Dow Jones also having a relatively flat day here today, but still in the red. Daily downtrend is well underway for your Dow Jones stocks right now. In terms of these oversold conditions, we're really getting to your oversold RSI. Sorry if this is so small here, guys. I don't know what happened, why my chart really moved like that. Let me just blow it up right here. Perfect. That's a lot better, right? So oversold conditions, as you can see on the Dow Jones. Dow Jones being one of your more value-oriented indexes, whenever it hits daily oversold, guys, it usually doesn't last there too long. You can see over the course of last year, yes, it can get a little bit lower than where we are now, but usually that's the tail end of a leg of selling before we can see a potential rally, right? A little bit of a rally here off your lows. You can see whenever we hit those daily oversold conditions, whichever, whether we're in an overall context of a downtrend, at least we're going to get a bounce. So that's what we're looking for. We're looking for the start of a bounce. That bounce will obviously be precluded right here by a change in the hourly trend. So as soon as you see that hourly trend change, we'll be looking for the size of the bounce in relation to 39,000, right? If it's a decently sized bounce, 62% or better, right? Then the bulls have a chance at resetting the daily uptrend. But if the bounce is weak and we maybe get stopped out at these moving averages, at this previous line, which was support, which is now resistance, that's about 38,505. Could we see a scenario where we get rejected and then the bulls have to put up some defense at these lower lows or risk losing them for further downtrend? Yes, that is the likely scenario that's going to happen in my opinion here, guys. Probably going to get rejected by these moving averages now, after which, if the bulls can save this, that is all going to depend on the overall macro conditions. Number one, fears of inflation concerns. We have the Federal Reserve, the 1st of May, coming out with another interest rate decision and much needed commentary on these markets. And obviously next week we have big tech earnings, right? A lot of big tech names are in the Dow Jones. That could provide your little bit of a relief rally as well. So we'll be keeping a close eye on this, but one thing's for sure, really approaching those daily oversold levels where we are expecting a bounce. Now we need to measure the size of the bounce when it happens to determine whether or not this weekly downtrend will now be set in motion, or whether or not the bulls can save it and potentially recapture this into the end part of May. Now let's move into crypto a little bit quickly, because crypto had a couple of structure changes today. So in terms of Bitcoin, right, daily downtrend is well underway currently, which also we have now unfortunately flushed here, guys, our weekly levels as well, right? So we were looking, can the bulls save the weekly downtrend by protecting these lows right here at 61,000? Unfortunately, we broke them today. So weekly downtrend is in motion, although you know, it is a weekly downtrend. It is kind of sideways. I understand that this sideways action is a very broad range, right? It's like 10-15% range, but still the sell-off has not accelerated too much on Bitcoin. We still have our last line of defense, which will be your previous all-time highs right here, or the previous all-time high range, right, at about 57,000. And then below that, the support levels get very, very thin, very, very quickly. The next one after that is all the way down at about 52. You can see he came out right here, and he was here again, right? So we do have still a decent amount of room to work with on Bitcoin, even though we are in weekly consolidation. The bulls have been protecting this range very, very nicely indeed. So far, not enough information, but one thing's for sure, if we break that 58,000, guys, it's not going to look pretty. It will be at this point, guys, it will just be for monthly consolidation for a resumption of this trade, potentially in the next couple of months, right? We have the halving event coming up in pretty much 3 days at this point. Sometimes that's a sell the news event. We'll see what happens with that. But if we do, guys, for some reason, pull back down into the 50s into Bitcoin, this, in my opinion, is going to represent a gorgeous, gorgeous, gorgeous buying opportunity for the tail end of 2024 and even through 2025. Still extremely bullish on crypto, but just some much needed monthly consolidation similar to the rest of the markets that we've been seeing, right? Bitcoin, just the same. In terms of Ethereum, well, Ethereum as well is pretty much in a daily downtrend right now, trying to save the lows, but the bulls are not looking too strong. So daily downtrend simply maintained right now. Keep an eye on these lows. Keep an eye on 32.69 as well. If we recapture 32.69, you get a little bit of a daily uptrend, and we will get a little bit of a weekly bounce, right? But even on the weekly downtrend, still just looking for that lower high, and then we'll see, can the bulls save the lower low, or we just head to a further level down? The further level down, guys, really starts at about 2,700 all the way down to about the 2,500. Would not like to see the bulls pull much below that. That is this whole area right here. It's a fairly big level for Ethereum. If I can find my little rectangle that I'm looking for right here. So this is the level I'm talking about on Ethereum, right? You can see how much times it's played as support, a little bit of resistance right here, big area of congestion. So that area really comes between 2,700 and 2,500, the start of that area. That could be the maximum pain for potential Ethereum on this drawdown cycle. And similar to Bitcoin, we'd just be really looking for that monthly higher low for further trend expansion when the risk on assets become more favorable once again. So that's pretty much it for your crypto names. Now let's jump into Apple right away. Sorry about that, guys. So let's jump into Apple. So Apple down 0.81%. And unfortunately, at this point, guys, Apple giving back all of the gains that it had last Thursday and Friday, completely engulfing move by the bears at this point. So it opens the door. Whenever we do get a little bit of a rally, whenever this move is finished selling off, we are going to see the hourly uptrend change. Then we're going to be measuring the size of the bounce here, guys. Obviously, we need to protect these lows right here, 167.17. If you flush that here, guys, it really sets up the bears, perfectly in terms of probabilities to get the lower high and lower low flush. But if we can save the double bottom and put in a nice little rally here, we may just be able to hold somewhat of a tightening range prior to earnings. So essentially what I'm saying is I really need to see the bulls hold this lower area of support. We're talking about 165 all the way up to 167. This little tight range right there is what we want to see the bulls hold until the earnings cycle, right? Give ourselves a little bit of cushion prior to earnings, because we know that Apple's iPhone sales have been roughly down 10% in relation to last year's quarter, right? They're probably not going to have the best earnings, which is why we need to put as much distance between the bottom, the floor right here, and the market, right? To give ourselves enough of a cushion. That way, if ever we have a 3, 4, 5% drop on earnings, at least we have a chance of still saving these lows. If we grind lower and set the daily downtrends and lose this big support into earnings, guys, it's not going to be pretty. In my opinion, after that point, we'll probably be heading to our lower range of support, which is 155, 150, a tremendous buying opportunity for Apple. That would largely be a potential touch of your 200 weekly moving average. And you can see every single time Apple stock has touched its 200 weekly moving average in the past, it has always been 2008, right? Here we have right here, 2013, 2016, 2019, right? Even COVID did not hit the 200-week moving average. If we hit that 200-week moving average, even if we get remotely close to it, like January 2023, you can see it has always been a very juicy buying opportunity. So that is pretty much what we're on the watch for with Apple stock. So far, the bears just a little bit too strong. Need to see the bulls gain some momentum, put as much space between us and the floor prior to these earnings, right? Now moving on to AMD. So AMD really getting washed here today, guys. Unfortunately, 5.78% to the downside. And it's really not AMD's problem here, guys, right? You can see as a whole, it's not the company. It is the entire sector. As we were saying, semiconductor bulls were some of your last bulls. Now, did AMD jump the gun before most of your semiconductors players in terms of the drop that they've had? Yes, them and Intel have dropped the most. But it's a problem, guys, when big companies like ASML prior to earnings really weren't down too much, right? They were only down from the highs about 8%. Other companies like NVIDIA are still significantly holding the highs, even though they lost them a little bit today. Prior to today, right, we were only down roughly between 8 and 9%. And NVIDIA is an extremely volatile stock. Other strong companies like Applied Materials, prior to today, they were only down about 4%. Another huge company in these markets, Broadcom, prior to today's trading, Broadcom even was only down roughly about 6-7% from their all-time highs. So they really have not had much downside consolidation. AMD and Intel have really been hit the hardest, but then again, they are also two of the companies that have the most ambitious valuations, right? So really getting chopped down on AMD right here. Unfortunately, at this point, guys, breaking through our last line of defense. So I was saying leading up into the last 2 weeks of trading, when we come down into this range, there probably is going to be the justification for a little bit of a bounce trade. And I was playing AMD here in the past 2 weeks and did not get assigned. But if the bulls were not able to manifest much of a rally from this point, we were getting a little bit nervous whether or not, due to continued market weakness, we were going to flush this. Well, now, guys, unfortunately, the flush has happened. We're now below our previous area of consolidation in January and February. And we're also now, that also coincides with your previous all-time highs. So now AMD, really the area that we're going to be looking for here, guys. Coming up on it quickly, 150 down to about roughly 140 is going to be the next line of defense for your bulls right there. You can see in terms of that level expressed, it really comes down to about 137 as well. That's going to be this region right about, let me pull this up a little bit more, right about here, right? So this level right here is going to be a next very big area of support. It's an area that AMD struggled to break out of back last June here. And it's also the most recent weekly support from this entire massive bull move. So as a whole, guys, unfortunately, loss of the support level. The same rules do apply for AMD currently. So what are we looking for here? When we regain the hourly time frame, hourly oversold conditions right now, the 4 over conditions are also oversold. However, we are still not daily oversold. We're getting there though. So if AMD flushes once again, right, we're going to be looking for the size of this bounce. If we can get together a bounce in the next few days of trading, we'll be looking how high can the bounce get in relation to our most recent lower high, 164.77. Can we get back above this big area of previous support, right? And potentially give us a chance at setting a new daily uptrend and start attacking this 180 level? Or are we just going to come too close, too far below this, use it as resistance, and then potentially get the extended flush and just continue this extended weekly downtrend that we've been in? Unfortunately, this weekly downtrend is really gaining a lot of steam, right? Down now on AMD, pretty much 32% from the highs of the month of March. This speculative top, guys, was extremely overvalued. So it's nice to see AMD really coming back down to gravity. I apologize, guys. I don't mean any negative connotation to that. If you bought stock up here, I'm pretty sure that AMD over the next couple of years will probably be higher than this. But in the short term, with the valuations that they had now and the fact that they're not expanding data center business as rapidly as NVIDIA is, well, they were baking in a lot of this entire year's expectations all the way in early March, right? So coming down a little bit now, but I'll remind you, we're still in this context of an overall bullish trend right here. Still just looking for the monthly higher low for further trend continuation. And your 12 EMA on the monthly, guys, is around that 140 level that we've been previously discussing. So keep a close eye on AMD. Still no signs of any bulls, but as I said, guys, they should be getting more and more attractive down here in the lower 140, maybe 150 level, which does seem like a larger area of support as well. And your 200-day moving average is also right down here at about 143, 144. Moving on to Amazon right now. So Amazon down about 1.11% on the day. So Amazon did something today, guys, that we were kind of watching out for, right? If the rest of the market wasn't cooperating. Loss of the daily uptrend. They lost the most recent lower, higher lows right here at 182.83. So now the bears have an engulfing move. It sets them up nicely to set the lower high into lower low daily downtrend. That will be the first daily downtrend on Amazon pretty much since the early part of March, after which they recaptured it right away. But now, guys, we're kind of getting really deep into the moving average territory, right? You can see that we're kind of closing right at or below the 26, and that really hasn't happened in a significant amount of time. So it remains to be seen if Amazon can protect a crucial level, which is the area they just broke out of, the 178. Crucial level, right? Gorgeous weekly uptrend right now. And the 178 is going to represent a beautiful area of support. Your 12 EMA is right there. However, if we were to lose this, guys, it's going to be notable to us. Earnings are pretty much next in 2 Tuesdays from now at this point. So Amazon, in my opinion, guys, needs to do a good job of protecting the 178, because if we lose the 178 heading into earnings, it just opens up the bears potentially to start attacking these most recent weekly higher lows, 171. And if we lose the 171 here, guys, may just be due for weekly downtrend, weekly consolidation at that point. And that would just be for a very healthy monthly higher low on Amazon. And I would personally be targeting at that point, guys, this level right here that held up so well, talking about 155 up to about 160-ish. That's going to be the level where I'll be more attracted to buy some Amazon stock if ever we come down to there for any which reason. Even if earnings are good, but the market just sells them off anyways, that is heavily where I will be buying. That whole 160 to 150 region, pretty much 160, right? Prior to the earnings gap fill. Not really sure we're going to get down to 150. 160 seems to be like a very good area. And that will be a sell-off pretty much from top to that area of about 14%. 14% is pretty much what Amazon dropped top to bottom last October as well. They even went a bit more than that, about 18%, right? So keep a close eye on Amazon. But Amazon, one of your lead bulls, now potentially rolling over the daily uptrend. There's not many lead bulls left, guys, in this market. Google, another one of your lead bulls here, guys, trying its best to protect gains here today, 0.56% to the upside, right? So still in the context of this gorgeous daily uptrend right now, and now the bears have taken back a decent amount of the move. If, however, we crack tomorrow, yesterday's low, 155, if we break that the rest of the week, daily downtrend would be set, and that would be one of your last lead bulls. Amazon and Google were the two last names preserving their daily uptrends. Amazon has just lost it. Google has not lost it yet. If they lose 155 tomorrow, they too will be joining Team Bear, unfortunately, for short form consolidation. So we will be looking out for that. Obviously, if they have a great day tomorrow, we're just looking to continue this daily uptrend to the upside, and we have all-time high resistance at about 162. But lose this to the downside, guys, well, daily downtrend is set. And then we'll just be in weekly consolidation, anything above 132, just looking for that weekly higher low for further trend continuation. Google should be fairly muted, not too many days of trading before their earnings next Thursday, so only about 5 days of trading. I'd be highly surprised, guys, if we break this larger form support 151, or even if we break the all-time highs much before earnings, just because there's a lot of timidness in the market right now. Earnings will really be the major catalyst. Google, for me, very easy, guys. If I can see Google ever below 150, let's say 150 down to 145, potentially if their earnings are underwhelming or something like that, I'm definitely going to be going shopping for Google down there. So this is a time, once again, guys, you can see that I have a lot of green areas on my chart, right? These green boxes where I'm potentially looking to buy stocks. I always try to tell you guys on the charts while I'm doing them live, but this is something you guys should also be doing, right? Deriving levels at which you will be comfortable to be buying stocks throughout this downturn period. Moving on to Meta right now. So Meta down about 1.12%. Meta also used to be one of your lead bulls, but has recently joined Team Bear. Daily downtrend is set. And now, guys, we are going to be eyeing this lower support area. Meta with earnings next Wednesday. So only about 4 days of trading before they report earnings. So I'm not expecting crazy moves before earnings for Meta, right? I'm not expecting a break of your all-time highs. And also probably not really expecting to flush these lows too much. 477 is going to be your last line of defense, right? So it is a daily downtrend as of now, but the bulls are playing fairly decent defense, right, guys? They were only down about 6.5% from the highs. I know that sounds like a big number, but in the overall context of these things, look at the monthly, guys. Really haven't consolidated much on Meta. So let's say Meta's earnings next week are underappreciated, and we do potentially get the earnings flush. That would be a flush of your weekly big support level, guys. We're in a gorgeous weekly uptrend right now, but the bulls are looking a little bit tired. So if we get that flush right here, it would be weekly engulfing move, and it sets up the bears to maybe set the lower high into lower low for a little bit of weekly consolidation, similar to what Meta had last October, right? Top to bottom on Meta last October. I understand the company was full recovery cycle mode, right? Doesn't look like a big drop here, but that was a drop of 14%. So if we do get that drop, guys, maybe expecting exactly the sweet spot area that I'm targeting. 450 to 440 seems to be a great buying opportunity for Meta. And that, once again, would just be for some healthy monthly consolidation. Maybe the rest of the month of April and early May, set a little candle down here, come into the 450, 440, and then we may be able to resume the trend for the rest of the year. So that's what I'm expecting for Meta. And obviously, if they have good earnings, guys, and we maintain close to these levels, the bulls will have a chance at the engulfing move and just maintaining this persistent weekly uptrend and just continuing momentum higher. Moving on to Microsoft at this point. So Microsoft down 0.66% on the day today. And Microsoft also used to be one of your lead bulls. We had the weekly breakout of your range. It was a nice bull flag, but unfortunately, Microsoft getting pulled back by the rest of the market. Nothing specific to the company, really just overall weakness. So now we're back within our range of consolidation, right? This is the level between 415 and roughly 397. And same thing for Microsoft. They have earnings as early as next Thursday, only about 5 trading days left. So I'm not really expecting big price swings from Microsoft, not expecting to smash the all-time highs before earnings, and I'm not really expecting to smash these lows of weekly consolidation before earnings either. That being said, if we maintain roughly in this range right here, we should be able to make an attempt at either one of these levels after our earnings. So it just remains to be seen, guys. How close will we be? If we come too close to the lower end of this range here, guys, prior to earnings, and the earnings are underwhelming, I'm not saying they're going to be bad. They might really be good, but the guidance may just be a little bit soft, right? Well, in that case, we may see a flush of this lower level right here. And that's when I start activating my shopping list for Microsoft, roughly in the 390 to 380 area. Seems to be like a great area of consolidation for me. Just looking for the monthly higher low for further trend continuation. And last October, top to bottom, Microsoft sold off about 15%. And so far through the dip, we're down about 4% already. And you can see here, guys, right? If we go 12, 13% to the downside, that would be my level, 375, 380. A little bit further would be 365 for the full 15%. Not too sure we're going to get that, but I will be ready either way. And obviously, if earnings are good, well, we'll probably make a new march towards the all-time highs. Microsoft so far, though, not looking too bad in the overall context of how everything is looking. Just hunting for that weekly higher low currently in these markets, right? Just an extended weekly consolidation right now. Moving on to Netflix. Netflix, I mean, not looking too bad considering the fact that Netflix has earnings tomorrow. So as I was saying all week, price action for the week going to be fairly muted here, guys, today, right? So 604 is the lows that we need to protect. Those would protect the furtherance of the daily downtrend. And also, guys, that would also protect, right, these weekly support levels as well. We are in a gorgeous weekly uptrend. The weekly higher low is all the way down here at about 550. This is just all one weekly move, a very choppy weekly move, but one move to all the same, right? So earnings either going to send us either way here tomorrow, guys. The expectation for Netflix earnings is fairly bullish in my opinion. However, anything can happen, especially in a market of heightened emotions. You saw how the markets have been selling off most of your major bank earnings, even though they were good. They sold off ASML earnings, even though the company did guide for lower than expected Q1, right? The market just reacting very negatively to it, even though the company already forecasted that this was going to happen. So it remains to see what's going to happen with Netflix tomorrow. One thing's for sure, very close to 2 levels right now. Obviously, if earnings are amazing, we're going to crack these 637 highs, and then we are going to be looking to test maybe your all-time highs. The all-time highs are really not that far away in the context of Netflix's performance, about 13% away. But if they're negative to the downside here, guys, today, we have a few levels to respect, right? First is going to be your 575. That is the top end of your resistance range, 2020 and 2021. And also the lower end is going to be your weekly higher low right here at about 550. So this whole 550 to 575 pocket is going to be a juicy area to be picking up Netflix, in my opinion. Top to bottom, guys. That would represent a sell-off. Let's say we get all the way down to about 550. That would be about 14% to the downside. And you can see at the height of the sell-off after the highs, I mean, this July high was a bit of a blow-off, but if we take the averages, right, leading into the fall sell-off, Netflix was down, a very healthy 22% at that point. I'm not saying we're going to go down that much. 22% would really put us towards the bottom end of this range, towards the 500s. I'm not expecting that much of a sell-off on Netflix because the company is a lot better positioned than it was even only 6, 7, 8 months ago at this point. But anything can happen, obviously. This whole range right here, 575 down to 500, is very, very juicy, guys. I personally want to see 550 or better. If I can see 550 or better, maybe going shopping for a few Netflix shares. Now moving on to NVIDIA. NVIDIA obviously not having a great day today, down 3.87%. One of your larger players that was responsible for the sell-off here today, right, in terms of the weight of that they have in the index. So NVIDIA, unfortunately, guys, really toying with our lows right now. We broke an important level today, 850, but you can see we broke it twice over the course of last week, and the buyers were able to step in and get us back above that level. So we are still at a point of contention. I would not say the level is completely lost, but it's not looking good because we have a hard close with a lot of momentum into this area, right? In terms of your hourly, are approaching hourly oversold conditions, so we'll be on the watch tomorrow. Can the bulls reset an hourly trend change and get a little bit of a daily bounce underway? If they cannot, if TSMC earnings are underwhelming and they once again give relatively weak guidance for the first half of 2024, well, NVIDIA is going to be affected as a byproduct, regardless of how the company is doing itself, right? So in terms of that, we could be looking out for the extension here. Maybe the daily flush is going to be underway, and that would be important, guys. We haven't lost this 50 EMA, this red line right here, since pretty much all the way back December of 2023. So that would be a very considerable level. And if ever, guys, if ever we lose that, unfortunately, it would be the perpetuation of the daily downtrend and also would just be continued weekly consolidation for NVIDIA. The next big area that we'd be looking out for, well, you have your 12 EMA right here at about 811, but the sweet spot for NVIDIA, let's say we go for any which reason, guys, let's say big tech earnings are bad, TSMC guides negatively, right? Let's say just everything is negative. Could maybe be expecting extended weekly consolidation on NVIDIA. That would lead to monthly consolidation as well, similar to exactly what we had last fall. And that could bring us down into this area right here. Take a look at the last fall sell-off. Last fall sell-off was about 22%. Doesn't look like much in the context of how NVIDIA has been performing, right? So top to the bottom, 22%. Where does that put us? This green box that I've illustrated on the chart right here. We brought up this area a few times, guys. This is your prior earnings breakout level. It's the 26 EMA as well, which we have been protecting this entire time since the bottom of NVIDIA when we finally started mounting the rally. So that should be a very big zone for buyers on NVIDIA, talking about 745 down to 700. Am I saying it's going to get all the way down to 700? No, but could we maybe get, if the overall context of the market is bearish, could NVIDIA get dragged down as a byproduct of that? Yes, I will be going shopping for NVIDIA rather, 750 down to 700. I'll be accumulating as many shares as I can for the monthly higher low for further trend continuation later on in the year, as semiconductors should be getting better in the later part of this year. Now let's do our 3 last ones here. So Tesla down about 1% to the downside here, and Tesla does have earnings next Tuesday. So in my opinion, once again, price action should be fairly muted until that time. One thing you definitely do not want to see, guys, is a loss of this low right here, 152. If we lose the 152 prior to earnings, guys, it sets up the bears to then use this level as resistance coming into earnings. And then if earnings are bad, well, then you know what's going to happen. We are going to get the all-time, well, not the all-time, right? The 52-week low Tesla flush. and that could send us down into the lower 130 areas before finding new support for the bulls. As a whole, guys, context of this chart, weekly downtrend is clear as day right now, approaching the bottom end of your downtrending channel line and approaching the bottom end of your support as well. But earnings, guys, if earnings is bad, it's really going to flush this channel line as well. But on the flip side, guys, if earnings are less bad than anticipated and management is able to do a good job of managing investor expectations on the call, we could see a little bit of a rally on Tesla at that point after earnings, and then we will be looking how high can the bulls get in relation to 175? If we can muster a nice little bounce after earnings as high as 175, it sets up the bulls to maybe get a little bit of a daily trend change going here and maybe even start reversing a lot of this damage that's been done on the weekly. But first step is key. We need to recapture this daily uptrend before we look to the higher timeframes and before we start talking about a larger form Tesla recovery story, right? So that is pretty much what I'll be looking out for on Tesla. Now, moving on to Palantir. Right, so Palantir also not with that great of a day, 2.61% to the downside. But after talking yesterday, guys, that was largely to be expected in my opinion, right? We had a lot of overhead resistance right here. We're in the context still. Big daily downtrend. You can see that best. These are the last two legs of that daily downtrend. So as soon as the bulls can put in a new hourly trend, right? Still no hourly trend change. As soon as the bulls can get an hourly trend change going, we'll be looking for the size of the Palantir bounce in relation to our most recent lower high, 2314. The problem with 2314, guys, it's an area of confluence of resistance right now. All of your moving averages are right there. Your horizontal previous support level, that's now resistance too. So could we see a scenario in which the bulls bounce here, but then get ultimately rejected by the bears and revisit these lows, maybe even lose these lows? Very possible because we are in the context as well in this weekly downtrend. Heavy momentum, MACD crossed to the downside as well, and still no daily oversold conditions, right? Palantir usually always bottoms out when we get a series of oversold conditions on the daily or slightly oversold conditions on the daily, coupled with oversold conditions on your lower time frames. The 4 hour is starting to get there, but you can see a few times it has been more extended than it is currently, namely in the period of, let's go back here to your last October period. You can see that we stayed oversold for a number of weeks in a row, right? Probably about 3-4 weeks in a row at that point where we're staying oversold. So Palantir, probably not finished. However, we are coming into a big area of support. Prior support 2020-21, and we do have big resistance here. So all this area should be newfound support. I'm trying to get as low as possible to $19. If I can get $19 on PayPal, probably going to be pulling the trigger for some longer term buys. And that would be a sell off top to bottom of about 30%. 30% is literally exactly what we did here, guys. Well, actually, Palantir, my bad. Palantir really did not dip in the end of October. They had their dip starting July into September pretty much, and they dropped about anywhere between 25 and 30% depending from which high you measure this. And that would be likely the same, right? That would be the 30% sell-off coming down into the 19 level. So that would be a very juicy buying opportunity. Still, once again, I'll remind you, looking for the monthly higher low for further trend continuation. So all of these things are bullish, need to be making the most of these dips, guys. Get your shopping lists together. And now lastly, PayPal. PayPal struggling on the day, 0.27% to the downside. So PayPal now still in the context of this daily downtrend, clear as day right now. Any move higher as soon as we recapture this hourly trend, still no hourly trend change, but once we do recapture it, we will be looking for potentially the lower high, and then we can see, depending on the size of the bounce, will the bulls be able to save this, or are we just going to revisit lower lows? If we do potentially revisit lower lows, they're already acting as, we're already going to come into this area right now, big area of support, guys, 63 down to about $61, huge chop zone in the past. And that's the area that I really want to see the bulls able to protect. In terms of the weekly, guys, the weekly is looking largely the same, right? So it was a technical breakout, as I've been telling on the channel for about, 5-6 weeks at this point, right? We broke out on a technical basis of our downtrending range of consolidation here. We're now above that. I would like to see the bulls maintain above that. And we can only really maintain above that, guys, if we hold 63 to 61. That is going to be best case scenario. Your weekly moving averages are right there as well. I would like to see a protection by the bulls of this weekly uptrend, set the weekly higher lows, right? Or maybe we even just trickle down into here with the weekly downtrend. I just need to see 6160 protected with their lives to give us the best chance at completing this technical breakout when the fear in the markets is alleviated right now. As of now, guys, PayPal is still a no trade for me. I'm looking to get as greedy as possible on this stock as I can. If I can get 60 or even 59, that is what I'm going to be doing on this stock. It's not one of my favorite picks for now, especially in the context of an overall dip. When the whole market is rallying, right, like, November through March, and PayPal is still relatively weak, that's when I like doing PayPal. But when the whole market comes down and you start getting deals on Apple, Amazon, Google, stuff like that, right? Well, obviously, guys, I'm going to be favoring those plays over PayPal. PayPal is still a decent recovery story, but once again, they did reiterate that 2024 is going to be a transition year for them. So I'm not expecting explosive growth. The best I can see for PayPal maybe this year is going to be about $75-$80, and we may only hit that in the tail end of the year when rates start coming down. So hopefully that's been educational for you guys. If you enjoyed the video, consider dropping a like. Would really appreciate it for the growth of the channel, and consider subscribing to the channel as well if you're new. Guys, we're already up to 1,100 subscribers. Really starting to see some of that snowball effect. So I really appreciate your guys' support in the channel so far. We have literally just hit yesterday the 1 year anniversary of the channel. It's been very fun. I've had a great time meeting a lot of you, answering a lot of your questions as well. So let's keep the ball rolling here, guys. If you appreciate the content and what I do, consider subscribing to the channel. It's free, right? And also, if ever you have any questions whatsoever, guys, please feel free to leave them down below in the comments, whatever you want. Technical analysis, if you want to look at specific stocks or whatnot. Usually we're going to take a look at all of our stocks, subscriber requests, guys, on the Friday session. Now that we're into earnings season, you can see here, we usually have more time on Friday because Friday we usually don't have that many earnings. This Friday we do, but I promise I will include some of your tickers on that Friday session. So hopefully that was all educational, guys. Take care. Once again, let's keep our heads up. I know when we see red across the board for days and weeks on end, it's not easy, but we have to train ourselves. This is the time when we have to build our shopping list. But please, please, please be patient, right? Since we're now in weekly downtrends across a lot of these indexes, weekly downtrends usually don't take, 1 week to reverse, right? Even in the October sell-off, before we really started getting back on track, right? It took a couple of weeks, right, for us to really set the bottoming process, right? We got really extended on our lower time frames, and then we had the rally. This may just be a case in point of the same thing, where we could just slowly trickle down here into the early portion of May, and then we'll get much, much, much juicier levels across individual names and indexes alike. So let's just be patient, guys. Be patient, build a list of companies you love, and let's go buying those dips, because as I've said, it may be the last opportunity to buy some of these companies at attractive levels before the end of 2024, which is going to be very bullish, and 2025 and 2026, which are going to be outstanding. So take care, guys. I'll see you tomorrow after the close, and peace.